2 minutes to go here into the closing bell. 4.5 hours to go until Game 3 of the NBA Finals at the world's most famous arena. Stocks staging quite the rebound after Friday's sell-off, with the S&P 500 expected to finish in positive territory. Not quite at their session highs, but up about 0.3%. Einstein himself, the great Peter Tuchman, here on the trading floor. What'd you see in terms of the auction today? We're off those highs. Kind of an interesting day into the close.
It was an interesting day. Look, we closed at the lows on Friday, and we continued to go lower. That normally sets ourselves up for a bit of a gap down on this morning, on the Monday morning, and then a capitulation. We didn't get that. We came in with a bit of a roar, so that's a good sign. And then I think the market just got a little bit tired by the end of the day. The sellers who are still around waiting for some profit taking, all for those big names like Micron and Broadcom and all those names, kind of let the buyers in, buy into the market, and then decided, you know what, look, I'm happy we had a little bit of an up day. I think I'm going to take advantage of this and sort of position myself. There's nothing wrong. They need to position themselves coming into the end of June because their portfolios are a little bit over their skis as far as their weightings in the different sectors, coming into the reconstitution of the Russell, S&P rebound, all that. Right. So any day they get an opportunity to take a little profit off the table, they're going to do it. Otherwise, I think it's a good day.
There you go.
I know it looks like we came in. That's okay. We're closing out on the green side. It's all good.
Peter Tuchman, the Einstein of Wall Street. Thanks for being here, bud. Let's go, Knicks. We'll see you in a bit. Time now for the close, live from the New York Stock Exchange. On this Monday, June 8th, stock staging at least a fair bit of a bounce back, given that selling pressure we had Friday down here on Wall Street. Tech, energy, discretionary, consumer discretionary, that is, in the sectors in the S&P 500, leading the way. Utilities, real estate, and materials leading the losses. Mag 7 in mixed territory into the close. Tesla, the highest gainer. Alphabet, the biggest laggard. Out in the Dow, meanwhile, Cisco, UNH, NVIDIA, the Dow 30 outperformers. How about these for laggards? Travelers, Sherwin-Williams, and Apple. However, a few hours ago, Apple was one of the strongest gainers in the Dow. Of course, we are following ongoing announcements out of Cupertino for the Worldwide Developers Conference. Almost a 5% swing, peak to trough, in Apple shares today as well. And we'll continue to follow that price action throughout the rest of the week out in California. Let's bring in our first guest. This is friend of the show, Jim Neeson, managing partner and founding executive at the Connor Group. My man, nice to see you here today.
Great to see you as well.
Thank you for taking the time. Before we really dig into today, I think it took some time for the dust to settle after Friday's big sell-off.
Yes.
Mike Wilson of Morgan Stanley called that sell-off a healthy reset. Do you agree? Do we need that little bit of red ink, down almost 2.5% last week?
Yeah, absolutely. I mean, right before that, May had all-time highs on 3 of the 4 indexes. Now in June, we have all-time highs as well. If you plot the data points, it's up and to the right. And so I think it sort of supports a lot of the enhanced guidance, where maybe a number is going to be going up with S&P throughout the end of the year. But I do think we're starting to continue to see that momentum in the back half of 2026.
Yeah, we had a few big name analysts here on Wall Street today give us their updated price targets, their price projections for the S&P 500 by the end of the year. They say, hey, 8,000, 8,100, not off the table. What do you think of those calls, and what could derail that type of momentum?
Yeah, I think there's always been some externalities, even in the first half of this year, that we didn't expect, right? So I think those little black swan events are potentially the surprises out there. But I do think we're starting to see a lot of, obviously with the big 3 IPOs going out, starting with SpaceX this week, Anthropic, OpenAI, you have a lot of momentum of companies getting in the readiness gym looking for 2026, but also to sort of have a lot of the verticals in different industries pick up as we move through the year.
Whether it's SpaceX, Anthropic, OpenAI, maybe this was a little bit of a glimpse in terms of what happened on Friday. Where do you think the money is going to come from? What positions get liquidated? Who sells what from where in order to try and take advantage of those listings, the first of which we'll get on Friday?
Yeah, I think it's going to be a mix. I do think there's a lot of dry powder out there, right? The proceeds from those 3 deals, about $200 billion, it's about 0.3% of the S&P 500. So there's a lot of money out there, $8 billion in mutual funds, and the retail investors with a 30% participation, there's a lot of money as well. I think it's going to be a nice mix, but I do think there's a rebalancing that's happening as well. And so they will look to maybe sort of overweighted positions, sort of prune those back a little bit. The nice thing is they've had a lot of runway over the past 6 months to sort of prepare.
Do these 3 high-profile, massive IPOs scare off other potential IPOs, or do they embolden, do they encourage other listings from far smaller companies?
Yeah, now the good news is rising tide often lifts all boats. So I think that's one thing that we're actually looking at. But I would say there's often a little bit of what I call a blast radius. These are deals that get a lot of media attention, a lot of institutional and banker attention as well. Companies are still preparing, making sure if a window is there that they can get out, but they're also going to be thoughtful in terms of that timing. You can never time the markets perfectly, but you can be ready. That's what we're seeing at Connor Group.
Specifically for the SpaceX IPO, is there part of the conversation you think we are not talking enough about, something you're focused on, you think people at home might benefit from paying a bit more close attention to?
Yeah, I think the first is this is an AI company. That's first and foremost. And it's a conglomeration. You have a space business, you have a satellite business, you have the AI business, and you have a data center business. Looking at the roadshow, it was pretty brilliant how getting a rocket up every day in 2027 will put 20 new satellites, so there's 100,000 new satellites out there, use free energy from the sun, cool off with space, beam data information back down to the Earth. That's the play here. It's a vertical integration play, and this is probably one of the most sort of innovative and game-changing companies that we've seen in a lifetime.
Before I let you go, I know just like me, you're a big Villanova basketball guy. Any projections here for Knicks Game 3 tonight at the Garden?
Yes, there's going to be mania. I see the Knicks taking Game 3, and there's going to be new history for Villanova.
Thank you for joining us,
Thank
my friends. Nice to see you
Appreciate
again.
it. Thank you.
Ruth the Man, let's go Knicks. Appreciate you being here. Robbie will grab your mic. Jeff, we'll bring our viewers here at the top. Analyst calls that cross the tape this morning here on Wall Street. First up, B of A reiterating Apple as a buy as this year's worldwide developers conference kicks off in Cupertino. Shares of Apple up 12% on the year, the second best performer so far in the Magnificent Seven. Next up, Baird upgrading Crocs. Yes, Crocs to outperform, saying a healthier North American story is emerging. Shares up almost 40% so far year to date. Finally, Barclays downgrading Avis Budget to underweight, saying it sees too many negative catalysts. Remember, Avis got caught up in that meme stock rally back in April. Shares shot up 400%, then they fell all the way back down, tumbling to about 170. Shares are still, however, positive so far since the start of 2026. And we got to talk Oracle. Jeff, trades here at the New York Stock Exchange, set to report quarterly results this Wednesday after the close. Investors looking for confirmation that AI data center demand is real and is sustainable. Shares pulling back off their June 1st high of $250 a share. Shares of ORCL down here at the NYSE in positive territory, about 7% year to date. Last week, FinTech TV's very own Anastasia Kinsky sat down with Peter Griffin of AVL Intelligence after he won the highly sought-after Money 2020 startup competition in Amsterdam. Take a look.
I'm here at Money 2020 Europe in Amsterdam, and I have the delightful pleasure of being joined by Peter Griffin, who is co-founder of AVL Intelligence. They just won the Money 2020 startup competition. Peter, congratulations, and thank you for joining me.
Thank you so much. It's a pleasure to be here.
So we're here to talk about scams. I mean, this is a completely changed landscape in the last few years. Tell us a little bit about the scamming problem globally.
Sure. I mean, I think scams have touched so many of us, our friends and family, and they're devastating. In the UK, the latest figure is that £450 million was stolen from scammers, from victims in a year. That's just what was reported. That's just the UK. And I think estimates for the global problem are tens of billions.
Yeah.
And behind all those statistics are humans and people who've been devastated. And scams, they destroy trust and they destroy lives.
And these are intelligence scams and scams that it's no longer sort of, oh my God, how did you fall for that?
Absolutely.
We're using really sophisticated programs.
Absolutely. We see that all the time. The sophistication of scams and scammers, whether it's technology they use or the psychological efforts and techniques that they have, that we're witnessing every day. There is absolutely no victim blaming, shaming here. Any of us are susceptible to this because all of us have psychological fragility that could turn us into a victim.
Yeah, we're not equipped for.
Exactly.
So we don't condone catfishing in general.
Indeed.
But in this particular case, your company has come up with a brilliant solution for trying to stop the scam before it's happened. tell us about Avial Intelligence.
Thank you so much. Yes, yes, we have. So Avial Intelligence, what we use, we are taking the fight back to the scammers.
Right.
So we are engaging with those scammers using modern technology. It's sometimes called offensive AI. If you think of scammers using AI to target victims, we're using AI to target scammers. So what we've done, we've created what we call the cast of personae.
Right.
These are, each of them a synthetic persona that looks to a scammer like a real victim. But it's not. It's an AI agent with a full online profile, a backstory, a voice, photos, videos of this person that looks to a scammer like their real victim. It's a honeypot trap using a chat bot, because all of the language that they talk to scammers with is LLM. So honeypot chatbot, what we call the honey bots, with apologies.
No,
so,
good one.
so yeah, we have the cast of honey bots that go out and engage with scammers at scale.
I mean, it seems like a genius solution. And then, of course, once you've engaged with that scammer, you get the details when they say, okay, send the money here. And then that's how you then help the banks.
Yeah, you've got
right?
it. Yeah, you've got it. We're doing two things. The first thing is that we are wasting scammers' time. Because every time that a scammer is talking to one of the honeybots, they're not talking to a real victim. Right. And that's important. That's great. You know, that's really, really useful thing. But actually, we're doing something even more precise, even more useful when it comes to the financial sector, which is extracting precision intelligence about the techniques and actually the accounts that scammers are using.
Yeah.
Let's take an example.
Before it happens.
Before it happens, exactly. Example here. Let's imagine a scammer is pretending to be Dua Lipa, the English singer, and they are talking to one of the honeybots.
Yeah.
And they will say, lo and behold, Dua Lipa is coming to Yorkshire, or wherever it may be.
Yeah.
And they want to meet up with one of these honeybots. And Dua, to get one of these passes, needs a security check for £500. And here is the bank account that you need to pay.
Yeah.
Our honeybots will extract that intelligence and then provide that to the financial services to make sure that, or the company, the organization, to make sure that that account is monitored and that no real scam happens.
I think it's such a clever approach. Talk to me a little bit about the numbers. I mean, the scale of then how you can do this. As you say, you're leveraging LLMs to do that. So how many you can be dealing with this. And then also your clients and who you're now reaching.
Sure. I mean, the scale is in the hundreds of accounts every day, and you know the conversations right now in our team based in the UK. We have scam intelligence agents, we have software engineers managing this, a team of 12, all scam investigators who are managing this cast of honeybots with human in the loop all the time, looking at the techniques. We have backgrounds in the intelligence services as well to make sure those techniques are really precise. And so with all of that intelligence we can supply to the financial sector. We've supplied intelligence to over 25 institutions now in the UK alone that's being used to stop scams. So that's really cool.
A global solution to a global problem.
Sure.
And we are very excited to hear more about catfishing as a service. I think it's a fantastic one. Thank you for joining me.
Thank you so much.
And enjoy the rest of the conference.
I appreciate that. Thank you so much.
Let's do it. Welcome back to the broadcast. Paul Tarantino joins us live down here on the trading floor of the big board. He is the CEO of Byte Federal, one of the largest Bitcoin ATM and digital asset networks anywhere across the United States. Nice to see you here.
Thanks for having me, JD.
For people who might be a bit unfamiliar, or maybe really haven't seen one in the wild, what exactly is a Bitcoin ATM? How does it work?
Sure. It operates like a Bitcoin vending machine, but you have to fully verify yourself, right? So just like opening up a bank account, checking account, you're going to insert your driver's license, we're going to scan it, we're going to do OFAC checks, we're going to pull your social security, we're going to collect wallet information. Then we're going to permit you to do a transaction. You'll deposit cash as opposed to withdrawing cash, and we send the Bitcoin directly to your wallet.
You and I were just talking about how difficult it can be to open up ATMs in certain locations across the U.S., and a lot of states have moved to ban ATMs.
That's correct.
Over concerns of fraud, et cetera.
That's right.
Why do you believe the machines themselves are not necessarily the root of the actual problem?
Oh, they're absolutely not the root. If you look at the chain of fraud, where does it all begin? It begins in the telecom and the voice over IP space, where you can spend $100, get a phone number with very little due diligence in regards to what the content of that call is or who you are that's making the call. Those calls are the unlocked front door to scam every American citizen. There are 52.8 billion robocalls last year. They do have a compliance protocol called Stir Shaken, where they rank A, B, or C in regards to the quality or the due diligence done on the call, but that A-rated security level was responsible for 48% of the fraud that took place last year.
And what does being compliant first actually look like in practice for you?
Great question. So for us, we follow BSA compliance, so all the anti-money laundering, the same level of compliance that a bank goes through. So we file SARs, suspicious activity reports, CTRs, currency transaction reports. Like I said, we fully identify our customer from $1. So there's not a single dollar amount of a transaction that you can do without being fully verified. To go further than that, which that just meets FinCEN requirements, right? We're a registered FinCEN MSB. We also hold money transmission licenses in states that require it. But we go a step further. Anybody who's over 60 years old gets a live call while they're at the ATM. We conduct a fraud education with them. It's our trained US customer support staff that asks them if anybody sent them to the ATM to do a transaction. Do you know your wallet? Do you know the name of it? If you don't know the name, what can you at least describe the colors and the look of the wallet to us? We reiterate to them what certain scam protocols look like. And we ask them at least twice, are you 100% sure today that you're not being scammed? If there's any doubt, any confusion, they're blocked from inserting any cash into our machines.
You oftentimes talk about serving the unbanked and the underbanked.
Correct.
Bit of a popular argument in the broader space. I know it's important to you. Who are those customers and what need are you trying to solve for them here?
Yeah, so the unbanked, about 25 million American families that are locked out of assets that will outperform inflation. Bitcoin being the first asset available to humanity without a checking account, without a brokerage account, has given them the ability to have a compounded annual growth rate that's conservatively 40%. We just did a little bit of research before coming on the show. In between 2018 and 2024, we had 800 customers that were doing small buys, $56 on average over that time period. On average, they invested $4,000. Today, those coins are worth over $13,000. So this is where the and unbanked can move up and fulfill that American dream. If we're banning Bitcoin ATMs in states, you're banning the most underprivileged, under-accessed part of our population, which is primarily Black, Hispanic, and Native American. So you're not doing anything to prevent fraud because we are already taking more actions than any other licensed, compliant financial infrastructure in the network. And by banning us, you're preventing those people from having access to change their life and build a net worth that gets them out of this inflationary cycle.
Right, really grateful for your time. You're welcome here to make the case anytime. Paul Tarantino, pleasure to see you.
Appreciate you, JD.
Paul's the CEO of Byte Federal. Don't go anywhere. We got a whole lot more taking stock coming up live, including the latest from Money 20. Don't go anywhere. More show after this. good. Thank you very much. Welcome back to the show. Robin Grew joins us now, the CEO of Man Group, fresh off of the Bell podium, bringing about a close to today's auction here on Wall Street. Nice to see you and congratulations.
Thank you very much. It's great to be here.
What was the experience like? Can I start there for you and your team to do the Bell?
Absolutely can. In any language and in any place, this is a significant event. It's exciting and it's exhilarating, but it also marks something, which is we have been part of the wealth market for some time, but these ETFs mark a different direction for us. And so the team of people who are here today with us, they've worked tirelessly over the year or so to bring these products to market. And it's a tremendous thing to celebrate it with them.
Let's talk a bit more about those ETFs, those core products. What are they? Who do you hope they most serve? And the most important parts about them that you would want our viewers to know about?
For sure. Listen, there's no denying the significant growth in the ETF space. We're seeing net outflows out of mutual funds. You're seeing this market catapulting into new and exciting spaces. You're seeing a sophistication in the market that you haven't up to this point. And that matches really nicely with high quality active ETFs, the sorts of things that we do. So as we've launched into this, we've thought, well, where's the client need been? And for us, the first two answers to that are in that high yield and that investment grade space, where we've grown in the last 5 years from something like around $15 billion to $55 billion of assets under management. And our two leaders in that space, so Mike Scott in the high yield space and Jonathan Golan in the investment grade space, they now manage $35 billion of assets. These are products that institutional clients have had access to, and now a broader set of clients through these ETFs can take advantage of these strategies.
And so Man Group, of course, as you said, has been long known for serving institutions and so-called smart money clients. How are you now bringing those same type of strategies to everyday investors? And what is the appetite that you hear from everyday investors who say, hey, that side of Wall Street gets that kind of treatment, we want a bit of that experience as well?
That's exactly the right question, and that's exactly the right way of characterizing it. Now you've got a much more sophisticated wealth consumer who's saying, I want access to those types of institutional grade content. I'd like some of that, and I'd like it in this format and in this wrapper, and enter the ETF world. And by the way, rightly so. This is a time where that sophistication and that capability should be part of people's allocations and portfolios. So it's enormously strong for us as an active manager, as an alternative manager, to be able to provide that type of content into the space.
Why did you feel that now was the effective time to expand your presence here in the United States, and how are you thinking about the different opportunities between this market and some others?
Listen, the growth is just phenomenal. How not to be part of something that's trajectory just looks more and more exciting? And when you see the opportunity for content to be packaged in these wrappers and to get access into the fastest growing segment, bar none. So we think about ETFs, but they're a reflection of the largest growing segment in the world. So as you think about, and I stand on this floor today very excited by the opportunity, it's not just an opportunity within the US, it's an international opportunity. And it's why standing here on this exchange is just so incredibly exciting.
It was incredibly exciting to see you, and you're welcome back to the floor, and you're welcome on the show anytime. What a pleasure. Thank you for joining us.
Such a pleasure to be here. Thank you.
Of course, Robin Grew, CEO of Man Group. Take good care. We'll see you again soon. Don't go anywhere. A lot more Taking Stock coming up live from the trading floor right after this. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence for your Monday afternoon. At this hour, the crypto majors in mixed territory. Bitcoin about flat near 63,300. ETH down fractionally. Solana up almost 6%. Next up, Sam Bankman-Fried officially filing for a presidential pardon from President Donald Trump as the former FTX chief continues to appeal his fraud conviction and his prison sentence of 25 years. And finally, JPM, Citigroup, other major financial institutions planning a new tokenized deposit network that would allow money to move across blockchains with 24/7 settlements to compete with stablecoins and compete with crypto firms. And now Scarlett Sieber of Money 2020 is back with a whole new edition of Jargon Translator, where she puts complicated, wonky finance terminology into language that anyone can understand. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Jargon Translator. Today's term is operating leverage, the reason profits can surge or collapse. Operating leverage measures how costs behave as revenue changes. If revenue grows faster than costs, margins expand. If costs grows alongside revenue, well, those margins, they just don't move. High operating leverage means small revenue shifts can cause big profit swings in both directions. This is why software companies scale beautifully in good times and feel pain quickly when growth slows. Operating leverage isn't about how big a company is, it's about how fixed its costs are. When markets tighten, companies with high operating leverage feel it first, through layoffs, restructuring, and strategy resets. Growth doesn't create profit on its own. Cost structure decides what growth becomes. And with that, that is your Jargon Translated. Drop the next term you want decoded, and it just might make the cut. In the meantime, back over to you.
Let's do it tomorrow morning here on Wall Street. We've got the latest quarterly results from the team at JM Smucker, and this time tomorrow after the bell, the latest results from names like Casey's General as well as Cracker Barrel. But before all of that, tonight at the world's most famous arena, Game 3, Knicks, Spurs, cannot miss basketball. Go New York, go New York, go. Your final tail of the tape, the S&P 500 in positive territory, 1/3%. The Dow down fractionally, and the small caps up 0.8%. That's going to do it. Let's go Knicks. Have a great night. We'll see you again tomorrow.